Hello everyone, this is Jeev again. In today's video, we'll discuss about a trade which I took in HDFC Bank. So we'll discuss about why I took this trade and what is the actual strategy behind it and what are the advantages of using this strategy. So let's get right into the video. Firstly, let's look at why I took this trade. So I saw a very good opportunity at HDFC Bank and I thought why not use that opportunity to execute a trade in futures and options. So there are three main reasons for executing this strategy. In order to know that, we need to technically analyze HDFC Bank stock. So let me just share my screen and show you the concept behind this trade. Have opened HDFC Bank chart here, guys. Among the three reasons, the first reason is HDFC Bank is available at a very good support region. If you can see here, HDFC Bank has respected the support line often, which means that whenever HDFC Bank has come to the support line, there is a clear buying pressure. So almost it has taken support 6 times. As you can see here, 1, 2, 3, 4, 5th and 6th time it has came down and it went up. So what I did was, after analyzing this stock when it was higher, I just kept an alert that if HDFC Bank comes below 1310 levels, I will just get an alert in my mobile phone so that I can use this opportunity to get into this trade. Second reason is Fibonacci tool. So what is Fibonacci tool? Fibonacci tool gives you the retracement levels. So what we have to do is, we need to drag from swing low to swing high levels. So Fibonacci tool has retracement levels from 0.3, 0.5 and 0.618. So the retracement level of 0.618 is considered to be the golden ratio. As you can see here, exactly HDFC Bank has taken support and started going up from 0.618 retracement levels. So whenever a blue chip stock corrects to 0.618 ratio, I just consider investing in that stock or taking a trade in it. Third reason is quite simple, guys. HDFC Bank has corrected almost 25% from its all-time high, which means that it has fallen almost 430 points from its all-time high of 1730 to almost 1300 levels. So HDFC Bank available at 25% discount is like an iPhone 13 Pro Max available at 50% discount. Obviously, like everyone, even I would rush to buy it. So the same way I rush to take a trade in this HDFC Bank. So these are the three reasons I took this trade, guys. This is why I took this trade in HDFC Bank, guys. So let's look at the strategy which I used in order to make the most out of this opportunity. So I took a strategy in futures and options. The name of the strategy is collar. So what does this collar mean? A collar is nothing but you go future long in HDFC Bank and you buy a put and you sell a call. Sounds a bit complicated, right? But it is a bit easier. I'll just break down what I've done.
So I just went future long at HDFC Bank at 1305 levels. It means that if HDFC Bank goes up by 1 rupee, I'll be gaining 550 rupees. It simply means that if HDFC Bank goes up by 10 rupees, I'll be gaining 5500 rupees. In the same way, if HDFC Bank goes down by 10 rupees, I'll be losing 5500 rupees. So this is the concept behind going future long.
And I bought this 1240 put. What does this buying 1240 put mean? And I bought this at a premium of 30 rupees. It simply means that if HDFC Bank goes below 1210 rupees, I will be gaining 550 rupees. For each 1 rupee fall below 1210, I will be gaining 550 rupees. So this is the concept behind buying this 1240 put. It simply means that the future long loss will get arrested by the 1240 put. It simply means that if HDFC Bank falls below 1210, the future long loss will get arrested by the 1240 put. And along with this future long and buying a put, I sold a call at 1460 at 8 rupees premium. It simply means that if HDFC Bank stays below 1460, I'll gain this 8 rupee, which is 4400 rupees. So this selling this 460 call will give you this extra cushion if HDFC Bank falls below. So this is the concept behind this call strategy. It might sound a little more complicated, but I will just share the payoff chart for this strategy, and along with it I will just share the trade logs as well, so that it will be easier for us to understand this strategy. So coming to the payoff, so this is the payoff chart, guys. So the center line here is 0, which is the break-even line. So the break-even point is 1327, which means that if HDFC Bank goes above 1327, for every point we'll be gaining 550 rupees, which means for 1328, 1329, we'll be gaining 550,100 rupees. And below 1327, for 1326, 1325 levels, for every point we'll be losing 550 rupees. On the lower side, the loss gets arrested below 1240 because of the bought put, and on the upper side, the profits gets arrested above 1460 because of the sold calls.
Max profit here is 73,150 on the upper side, and the max loss is 47,850 rupees as you can see on the lower side, which gives us a risk to reward ratio of 1:1.5. But usually I do something to convert the trade into 1:4 risk to reward ratio. For that, please watch the video till the very end. I've explained it as well. So coming to trade logs, I've logged into my Zerodha account already. So this is the trade log, guys. So in March future, I made a profit of 88,000 in HDFC Bank March future and made some losses in other hedged positions. So let's break down this future long. I have bought at 1305 and booked profits at 1382 and re-entered at 1373 levels and closed at 1456 levels. So in total, in future long, I booked a profit of 88,240 rupees, and in put option I lost around 24,640 rupees, and in sold call option I lost 5,280 rupees. As long as my future long position is in profits, I don't care about making loss in sold calls and bought puts. It's like when there is a huge risk, that position will help you. So in total, I booked a profit of 58,550 rupees in this trade, including future long, sold calls and bought. Lastly, coming to margin, you can check the margin required in the Zerodha margin calculator actually. So I have added all the positions in Zerodha margin calculator here. So as you can see, for future long, buying a put and selling a call is just 1.2 lakhs, guys. So I've added in April expiry because I cannot add in March expiry because it's already expired. So I made somewhere around 60k profit, which is almost 50% ROI for this trade. That is, I deployed 1.2 lakhs and made 60,000 profit, which is almost 50% ROI. So this is the power of combining technicals with futures and options, guys. Because by technically analyzing the charts, you will find a proper entry, and with the help of futures and options, you create safe and hedged positions. So this is the power of combining technical with futures and options.
So this is the strategy which I used, guys. So I just used this strategy to reduce the maximum downside risk. Lastly, let's look at the advantages of using this strategy. We all knew that the markets were quite shaky during the Russia-Ukraine war crisis. Imagine if there was a nuclear attack on Ukraine. The markets would have gapped down at least 5 to 10%. HDFC Bank would have gapped down at least 10% easily if there was a nuclear attack on Ukraine. So if I don't have a bought put for this strategy, the losses would have been catastrophic. The losses would have been more than 1 or 2 lakh. So in order to reduce the max loss, I just bought this put, which would be like an inbuilt stop loss for this strategy. So the downside risk, overnight risk, and the maximum amount which we will be losing is defined for this strategy, so that it will be easier for us to handle it. Because if we know how much we will be losing, it will be easier for us to handle it in the first place. So this is the main advantage for this strategy. And the second most important thing is that if HDFC Bank has broken that important support line, then it clearly means that HDFC Bank had broken that support. And if it had come to 1260 levels, that would have been my stop loss. If HDFC Bank had had a breakdown and if it had come to 1260 levels, my future long would be at a loss of 45 rupees, which is almost 22,000, and my bought put would be at a profit of 10 rupees at least, and my sold call would be at a profit of 3 rupees. So in net wise, I would be at a loss of 25 to 30 rupees, which is almost 15,000. So when HDFC Bank comes to 1260 levels, I will just close my eyes and close the positions. So that is the actual idea behind this trade. So this would just reduce the maximum loss to a great extent, which means that I will just be risking 15,000 to gain a maximum amount of 60,000. So the risk to reward ratio for this strategy is 1:4. So I'm risking 15,000 and gaining 60,000. And the risk reward of 1:4 ratio is a pretty good ratio considering the market situation. And having this risk reward ratio of 1:4 will give you an edge over the market. So lastly, I would just want to say that the margin required for this strategy is 1.3 lakhs. So some people would be like, if I have 1.5 lakh, can I execute this strategy? It's a big no, because I would suggest people who have at least 10 lakhs to execute this strategy, because for any trade, your maximum risk should be 3 or 4% of your capital. Since we have a maximum amount risk of 40,000 for this strategy, if you have a capital of 1.5 lakh, 40,000 is almost 30 to 40% of your overall capital, which is too much to risk. But if you have a capital of 10 lakh, the maximum amount which you will be risking is 30 to 40,000, which is almost 3 to 4% of your overall capital. So I would rather suggest people have at least 10 lakhs or even at least 5 lakhs capital to execute this strategy, because the maximum risk which you will be taking in this strategy is a bit too high if you're having a lesser capital of 1.5 lakhs. And on top of that, there's this important thing, which is, so if the trade goes against you, if you have surplus cash, you can make some adjustments which will be helpful for you to make some extra return. So having some surplus cash for the strategy is pretty good when you're implementing these kind of bullish strategies or high risk strategies. So this is the idea behind the trade, guys. Hope you all find it useful. Thank you so much for watching the video. Signing off until next time. Cheers.